Hi, this is Alessio. Hope you're well, and welcome to another lockdown edition of our videos. So, by the way, before I start, let me also apologize in advance if this camera shakes every now and then. It's very difficult actually to hold this camera and show you the screen and speak at the same time, so apologies in advance. So I don't know how you're spending your time right now during this lockdown, but I'll tell you one thing I'm not doing or trying not to do much is watch the news, because all the news is just terrible news, just depressing stuff. So instead, what I'm trying to do is watch some stuff I actually enjoy watching or listening to. So for example, recently I found some interesting music on YouTube. When I was much younger, now we'll go to the markets in a second, but I'm just going to say that when I was much younger, I used to listen to classical music a lot. And actually, I still do like classical music, but one of the pieces I really loved as a child, or as a teenager anyway, is the music of Mahler, Mahler's Fifth Symphony, as a matter of fact. So this is actually one of the great masterpieces. If you have never listened to any classical music, or maybe Mahler, this is the great one to start with, Symphony Number 5. Wagner is another one of my favorites. I quite like listening to Wagner, but apart from classical music, that's an interesting one. But other than classical music, I guess my other favorites are jazz and maybe trance music. So I don't know. Let me know what kind of music you're listening to right now. Let me know in the comment section. I'd quite like to find out. Anyway, let's go back to the charts and talk about what's happening here in the financial markets. Actually, I want to show you this chart. This is the chart of the stock market. It's going back as far as 2018. Okay, so if you look at this chart, let me just bring this closer, you can see it. So this is the entire rally of the stock market from 2018 or early 2019 lows that you can see right there, all the way to the rally that occurred here, and then the crash that occurred recently. So notice something interesting. This entire crash that occurred in the month of March, notice it wiped out. It wiped out all the gains of 2019. Now, if you've been watching our videos going back from 2018, 2019, you will know something, that we were predicting this crash last year. In fact, if you go back to my videos from even 2019 to early 2019, this is what I said. Listen to this.
Let me make my position very clear about the stock markets. My personal belief is that the stock markets, by the end of this year, by the end of 2019, will completely evaporate and eviscerate this entire rally that we've seen in the stock market. In other words, what I'm saying is this, that by the end of 2019, by the end of this year, we're probably going to see that this rally, which started back in December of last year, which has lasted pretty much and made all-time new highs just recently, I think we're going to see this entire rally being eviscerated, and for the markets to eventually give back this entire rally, again, potentially by the end of this year.
And this is actually quite hilarious and quite shocking, because it seems to me a lot of folks in Wall Street are essentially misinforming people about what's really going on with the economy and the stock market. There was an interesting and very shockingly ridiculous article in Barron's magazine. This is Barron's Financial Journal, and which is one of the biggest journals in the world. And they published an article, which I shared with you, and the headline was this bull market has no expiration date. I'm not kidding, guys. That was the article. This bull market has no expiration date. And by the way, when I read that article in Barron's magazine, my response was pretty much like this.
I've been saying for many weeks now that this rally we've seen in the stock markets, that I think this rally is most likely a fake-out rally, that it's not actually going to be what everyone thinks it is. Most people have already assumed that the bull market is back on.
So guys, you heard there, what I said in those videos was that pretty much all the gains of 2019 were going to be wiped out. All right, guys. Now, don't get me wrong here. I'm not trying to say I was great on timing. My timing was off. So my timing for this crash was at least about 10 months, maybe about a year early. That's the way it is in analysis. Sometimes you make calls, but just sometimes the timing doesn't quite work out. Nevertheless, though, the point is this. The crash that we were expecting, the major crash that was going to wipe out the entire rally, the entire gains of 2019, I beg your pardon, did eventually happen this year, early 2020. Now, the question you're probably wondering, the question you should be asking is, well, why were we so bearish in the markets? Why is it that for the most part of 2019, we did not believe in this rally? So why were we bearish in the stock markets? Because, guys, if you recall, back in 2019, I showed you one chart, one important market, the market that knows everything, the market that knows all. What am I talking about? Yes, guys, the bond market. So let's take a look at the bond chart. All right, guys, so I have here for you the chart of bonds, TLT, the chart of 20-year treasuries. And if I just bring this a bit closer, you can see for yourself what I'm talking about. That, notice, this is where bonds bottomed, okay, late 2018, start of 2019. And in 2019, we were rallying higher in bonds. And again, if you go back to my videos from 2019, what I said at the time was, look, bonds are going up and stock markets are going up. And that is very strange. Actually, that's very curious. And it's unusual because usually bonds move in opposite direction to stock markets. So the fact that bonds were going up and stocks were going up was a red flag, was a warning. Now, first of all, before I continue, why is it that we say that bonds know everything? Why is the bond market the market that knows all? Because here's the thing, guys. Most folks, most average people out there, don't pay attention to the bond market. The average person only pays attention to the stock market. And here's the thing. Majority of people out there, they don't trade bonds. Bonds are mostly traded not by individuals, not by ordinary folks out there, but by institutions. So what you're seeing happening in the bond market, in bonds, for example, chart of TLT, this can actually tell you what institutions or insiders are thinking or maybe expecting in the market. So when we saw in the most part of 2019, bond markets, in an uptrend, rallying higher, as you can see here, rallying higher and higher. So both bonds and stock markets were going up. And that's why we said in 2019, this is unusual. This doesn't make any sense. So bonds are going up and stocks are going up. Bond market, the market that knows all, was pricing in uncertainties, pricing in volatility, pricing in something is not right with the economy. All right, guys. So again, remember, because bonds are traded by institutions, institutional traders were already pricing in something terribly wrong with the economy. So again, if you were listening to our videos from back in last year, you would have known that this is why I said in my videos last year that pretty much all the gains of 2019 in the stock market would be wiped out. And again, it's pretty much what happened. As you can see, all the gains of 2019 wiped out in a matter of a month. The markets took out the lows of 2018, as you can see there. So I think it's actually a key lesson to remember for the future, because if you want to know if something's not quite right with the market, keep an eye on the bond market. Just going back to that chart. So here's the chart of bonds again, and we can actually see bonds this week are already up again. So not quite near the peak. In fact, let me just bring this closer. As you can see here, guys, bonds are up this week, and that's the peak right there near 180 on TLT. So the fact that bonds are going up shows that investors are still nervous. So traders are still nervous, probably not yet certain, confident about the economy and also the stock market in general. Although, having said that, they're not above the peak. So even though bonds are going up this week, they're not yet above that peak there. I think if bonds were to get above that level, it might again signify potential uncertainties and volatility in the market. But let me just say this. I'm also looking for an opportunity to short bonds, not just yet, but I'm looking to eventually short bonds once they fall below 160. So keep an eye on the 160 level here. Let me just bring this closer. 160, 162 is going to be a very important level of support. If I see bonds, falling below that level soon, then I might be tempted to take a stab at shorting bonds with a stop loss, obviously, above the recent highs. Anyway, I hope this video helps, and I look forward to seeing you guys in the next video update. Keep safe and the best of health for you and your family.